In this video, see how a firm prop trader is trading better than he thinks and why this is important to recognize. Hi, I'm Mike Bellafiore, co-founder of SMB Capital, and we're a proprietary trading firm located in Midtown Manhattan. And I'm also the author of the trading classic, One Good Trade, and the playbook. In this video, a firm prop trader shares in step-by-step detail a multi-day trade in GameStop with an additional lesson of the importance in giving yourself credit for what you are doing well. Let's get to work on sharing these important trading lessons so you can grow your trading account.
Today I'm going to be going over a multi-day backside pop play, and this is going to be in GME. This works well in quite a few names, but this actually sets up quite well in GME on multiple occasions, as I'm going to go through in a lot of these slides. Okay, as far as fundamentals, I think over the past year we've all learned quite a bit about GME, given what it's done. So, consumer cyclical special realty company, and they sell games, entertainment products through its online and in-person stores all across the United States, Canada, Australia, and Europe. And for this particular play, this is actually going to be, they're actually going to have a catalyst. They announced in after hours the previous day that they had filled their ATM offering program that they had announced a couple weeks prior. Average daily volume, 26 million. ATR, which is important in this, is 19.9, almost 20. 54 share float, which is quite small given the price of this name. Quite a high institutional ownership, as well as short float, which is still relatively high. Not as high as it once was, but still kind of high given what kind of name it is.
Good to make a note of what ARVL was. Good to make note of what the overall VIX was for your playbooks.
Yes, I actually have the VIX on a slide coming up, which should be like 2 slides, and I'll talk about that in a second. So SPY currently in a 30-day uptrend, coming back into its previous all-time highs during this play, which kind of has a couple inside days right at all-time highs, creating a really tight range, which is important to note just to keep on side watch. Just if this does break out and has an expansive move, it can water down some kind of outside place if you're looking against kind of the overall trend of what SPY is doing. And then, as Bella mentioned, VIX, we have seen a recent shift in VIX. It's a 30-day downtrend, and it's coming off quite a bit. And after talking to a lot of traders inside of our firm, as well as Dr. S has mentioned this multiple times, is how to kind of adjust to lower VIX markets or just changing VIX overall, is really trying to change your overall time horizons and how you're managing trades. And this plays right into this. So recently we've seen larger term moves work a little bit better with kind of a wider stop and looking for bigger picture moves instead of such short drastic moves with the lower VIX, which we're not going to get as much. So that plays a really important part in this overall trade and understanding how a lot of the trades in the current market set are working. So long-term technicals, obviously we had this really large run-up in GME, and then the secondary bounce, which ended up coming off after that big flush day, rolling over, and then a secondary bounce after we got these earnings back into this kind of 200 range, which is going to be this key level for this play. A really important note that I was going to get into is these multi-day backside pop plays, which, as you can see, anytime it gets extended or has an expansive move to the upside, such as this day, this big move after earnings, you see that it kind of trails off for at least the next day or the next couple days, like this, which is kind of what we're going to be seeing. So we're going to see if we can get kind of a repeat of history of if this name is going to continue acting the same as it does whenever it pops back into overhead resistance, fading for the next couple days, or at least for this current day, which is what this trade kind of takes advantage of.
If you want to learn 3 more real-world setups that our traders use, including the simple setup that we teach all of our new traders, and the setup that turned one of our traders into a 7-figure big money earner, check out the free webinar that we're currently running. Just go ahead and click the link that should be appearing now at the top right-hand corner of your screen. That will open up the free registration page in a new window, so don't worry, you won't lose this video. You can also visit tradingworkshop.com to register for this free intensive workshop. You're going to learn more in a couple of hours from this trading workshop than from years of online education.
So multi-day, this is what this expansive pop looks like on an hourly chart. So we get like almost a 3 ATR move from this low to this high, and it's gapping right back into this previous consolidation area, which kind of gives you a buffer being able to play. And so we can see we take out these 2 previous highs, which kind of stops out any longer term shorts that were trying to take advantage of these moves, and kind of resets the whole playing field, which is quite nice and makes it a little bit easier to trade at times and not as crowded. It gives some cleaner moves since we are expanding out of the range. The previous day that we had was extremely strong, unable to break down VWAP on the open, and this one held VWAP really well, curling up and closing upper quarter of the entire day's range. As I'd mentioned, a 3 ATR move from the prior made low. And then this is whenever we get the news after hours of the ATM getting filled, which is actually quite a big catalyst given a lot of people tried to play this to the short side whenever that catalyst was announced. So them announcing that this gets filled gives it an expansive push after we had already run up 2 days back into a previous range. And we set a pretty aggressive high early in the after hours.
People might not understand this at home. Why were they trying to short after the announcement?
So the announcement of the ATM, which just adds shares to the float, it's the company selling to help them financially make it through whatever hardships or whatever costs they do have. So they're basically selling into the current market price, and the ATM is, you can sell at any current market price that you do have. So it just adds supply to an already overly supplied chart, which in theory would make it go down easier.
So it should have went down, but it didn't.
Correct.
And the shorts got run over,
Yes.
at least for the short temporarily.
Yeah, and then them announcing the ATM has been filled, that kind of lifts that extra supply out of the market, which is why kind of got that positive reaction immediately back in such an expansive move. So pre-market variables, we just touched on the ATM news. The 198 after hours high was set, and it was sold really hard. I don't know if you can see this on this chart. Sold really hard back all the way back into these 180s range. So that's a pretty aggressive high set, especially with how high we do come off, or how hard we do come off. And then we're opening flat. A lot of the times you'll see with like GME or other kind of heavy catalyst-driven events that do have a lot of shorts, you will see a gap up the next 4 a.m. open, which we didn't see on this occasion. And then in pre-market going into the open, we can see that it was never touched. And so that kind of sets the tone that that 198 high is going to kind of be the inflection point for the day, to see if we can either A, retest that, or if it holds, that could be the high for the next couple days if this is going to be a multi-day sell-off after this extended push-up.
Let's just narrow in on what the overall trade is. So if you go back to the variables, what's the trade?
The trade is that after an extended push on a multi-day name, or a multi-day push on a name such as GME, it has the tendency to fade any overextensions to the upside once the top was set in it. So any extensions have been faded for multiple days, or at least in the shorter term time frame.
Okay, so 2 questions. 1, how do you determine overextended? And 2, are you using the high as a technical level?
So to answer your first question, overextended is going to be any multiple days in a row where it's going to be having extended pushes like this, and then it adds this after hours catalyst, which makes it even more overextended back into what's really important is into previous levels. So this 175 was a level, and then also 190 to 200 were also overhead levels from the earnings consolidation.
So is the trade overextended on our daily charts, overextended on our shorter term charts, up against a longer term technical resistance area?
Yes.
Yeah, I understand that. It might be helpful for you to be very succinct about what you're doing and what the trade really is. I did read your variables, and maybe that makes sense to you. It strikes me as you can be more succinct and clearer about what the trade is.
Yes, I do think I can be more clear with like ATRs and like RVOL and what easily defines overextension in each of the names. So for this, I really kind of wanted to see how a push would look back into to see if we could test this high. That's going to be the inflection for me all the way up to 200, which is kind of a hard level to kind of size into this and then see if we do get a rollover. And so off the open, we get a small sell on a little bit of volume, and then we get this expansive push back into kind of these highs to see how strong we really are. And that is immediately sold back under VWAP, back out of this range into these lows, and consolidates high, sideways. And that basically shows me that the larger term demand is not going to be able to sustain for this to push all the way back into these highs and continue to run, and that this kind of sets the tone for the day that this was sold so hard that it wasn't able to hold VWAP like the previous days, and that it's back under VWAP so quickly and so hardly sold really sets the tone for how this possibly can play out for the rest of the day. After this immediate sell-off towards highs, price begins to consolidate sideways. You see we never really test above this 184, 185 level, but I think the really key parts of this entire day is the failed push higher on multiple occasions. We have this, which starts the trend, and then here we're unable to test this high, and we end up breaking this uptrend and kind of selling off, but we continue to go sideways. And then the most important one was this one, I do believe, because we once again made a new higher high and then got immediately sold back into the range, back going sideways underneath VWAP. And it clearly shows that buyers are unable to push price any higher than the current price. And this stuff is immediately sold and consolidated, and then we finally get that larger term breakdown on high volume to kind of roll down and see if we can retest these lows. So Bella, that's kind of what this trade is kind of seeing if we are able to push higher and are strong for a continued day, or are we unable to push higher with failed continuation, failed follow through, and eventually a large term breakdown. Bigger picture, from the daily, historically, this every time it's pushed multiple days in a row, since it's been on its backside, they have been sold for multiple days in a row, and that's kind of what we get here. This high is never retested, and once we get this breakdown, we get a gap down the following day and a push down as well. And then even if I didn't update this, but yesterday it was sold back down even further with this high never being taken out. So like I said, with VIX being lower, really opening my playbook up to larger picture trades with a wider stop has been something that does work and has been showing a lot of promise lately, rather than getting such momentum moves. I was comfortable scaling in very small. This is extremely tiny size because I was giving it all the way to 200. Just having specific levels like 185 was a level that I had, and then 188, and then all the way into 200 was kind of going to be an area that I was going to be anticipating coming up. So whenever we get an immediately flush back into this 185, I took this off. This was VWAP hitting on this chart, but this is also pretty close to VWAP as well. So I took this initial sell-off to kind of rearrange my average if we did want to hold and push. And as soon as we sell back off underneath that, back into this opening price. I re-added it back, just started to add around a core, expecting as long as we were under 185, I wanted to see where the next lower high was to risk off of that and to start adding against this 185 and then against this previous high. And so just kind of reworking my average on these.
If I can just jump in right here, Tristan. So what if I were to say to you, take a look at your comments, and your comments focus on what you did poorly. What if I were to ask you to rewrite those comments and to focus on what you did well with your execution? What would your comments be as to what you did well?
I can definitely say the thing that I did well on this was not to oversize and keep the bigger picture trade in mind. So front side, I didn't oversize at all. I was really small and was able to risk where I wanted to. And then also on these ads, I was never unable to continue to risk more once the trade set up better and better. And then even being careful with taking off half right here as we're back above the shorter term high.
Yeah, I think you're leaving something out though that's pretty important that you did well.
What is that?
How do you feel about your entry price?
I thought it was really well, given the scale-in and how well it worked.
Yeah, it was a really good entry price. And I point this out because I think that's more important. The takeaway from this trade for you is that your entry point price was really good. You didn't oversize. And you kept the bigger picture in mind. That's more important. That's the most important part in reviewing this trade, is for you to understand what you really did well, so that you do that again and you remind yourself to do that again. And then to a much lesser extent, I could have done better here. So your thought process walking away from this is 85% of your attention is, these are the things you did really well. Let me do them again really well. And then, like 15%, I could have done a little bit better here and a little bit better there. Yeah, I think that's a much more constructive and accurate way for you to be reviewing this trade.
Rereading that, I can definitely see that. And whereas I did understand what I did well, but not reviewing it, I think is probably a mistake.
Yeah, and it just strikes me as you're being a little bit too hard on yourself.
So going forward, ideal trade management, I think for the first part of the trade, everything stays the same. I did, like I said, size it well, and just I need to be a little bit bigger since I am getting more and more comfortable with widening my time horizons on this. And then the only adjustment that I would make would be whenever we are coming into lows, understanding what kind of trade I am looking for and not taking as much off into this flush, and really looking for a breakdown of this 178 and these lows right here, and possibly adding a momentum lot for the breakdown, since I did have such a good average price at the time, given we just broke down on elevated volume. The trade summary is this continually sets up every few days, especially on GME. It does really well, given how well of a range GME does have whenever it does set up. And this isn't just a trade that sets up only on GME. This sets up on many multiple sector runs, small caps, anything. And so continuing to review these trades is going to be something that I focus on, as it can make a large part of my P&L on any given day. And also, this was a learning experience. Like I said, I'm learning some of these higher price, larger time frame movements and how to size them correctly, not expecting to just hit it for a lot of size with really quick momentum moves. Instead, letting these plays come to me and sizing them correctly really helped with this trade. And so what I could have done better, covers on the second half of the trade, like I had mentioned, and then possibly adding that momentum lot. Also, something that I want to kind of build into is, since I had mentioned this can be a multi-day trade, being able to have a good enough entry price to be able to hold a piece overnight for the following coming days, to try and work and learn how these plays play out on a multiple day time frame, and really just being able to work my average better and sizing up accordingly once I get more and more comfortable with these trades.
All right, so I'm reading here your comments, and you write, I need to always keep in mind the original idea of this trade as well as the sizing of the trade. 100%. I'd love for the next sentence to be, and I'm going to do that for my trading by doing XYZ 1, 2, 3. Does that make sense? I'd love for...
Yep.
You're doing a really good job of recognizing the issue. I'd love for there to be a solution, a specific solution that works well for you, or a specific solution you're going to try.
What I had thought about trying was making sure I keeping multiple time frames up, because of this being a larger picture time frame. Sometimes I do get too zoomed in on like maybe a 1 minute or 5 minute, and so zooming back out and keeping like a daily up or like a 15 to 30 minute or an hourly up was kind of going to be my first kind of stab at trying to be a solution for that problem.
Yeah, that's excellent, and you can try that. And another thing people do is they actually write down the target for the overall trade. So they say, yeah, I'm going to cover I think the cover is 165, or I think the cover is XYZ. And they write that down on a piece of paper, and they keep that in front of them, and they keep looking at it. That's another thing. And I just want to follow up there, where you say, I need to continue to grow my size in this trade as I learn to trade better and control my risk. Good, and good to recognize that. I would love, again, for the next sentence to be, here's how you're going to do that specifically. So I'm going to grow my size in this trade specifically by XYZ 1, 2, 3. And there's different ways to do that, and you want to be thinking about that. But it's funny, I actually think you're too hard on yourself in some respects, and I think you could be more specific for solutions, and you can expect yourself to be more specific of those solutions in other respects. And it's just so super important to be specific, because I don't really... It's much more meaningful to say, I'm going to be bigger in this trade by doing these things, by doing 1, 2, or 3. It's much more meaningful to say, I'm going to hold to target, and that's the solution for me focusing on the bigger picture. Those are very, I mean, just imagine trader A sitting at his desk saying to himself, I would like to trade the bigger picture better, or consider the bigger picture better. I'd like to trade this opportunity bigger, versus trader B, who's sitting there and in front of him is the target written out for the trade, which he keeps in front of him and he is referencing as he's in the middle of the trade. And also trader B, who's saying, all right, I'm going to risk 30% of my intraday stop on this trade, which is $3,000, and I have 10 points as my stop, so I can trade X amount of shares and do it that way. That specificity is really going to grow. It is really going to help you improve.
Yeah, 100%. That makes a whole lot of sense, and definitely. Thank you for bringing it up.
You really do want to point out the things that you're doing better as well. I mean, stock selection, terrific. Use of the longer term technical resistance level, terrific. Finding of a setup that really has edge. Overextended on your daily charts, overextended on your intraday charts, up against resistance. That's a terrific trade. That's a trade with edge. And leaving enough room so that you don't get stopped out, not oversizing it too much, really, really well done. Taking some profits into dips, that's an excellent best practice. You're doing so many things well. That's really important. Like every trade, you really want to see the things you do well, because that will help you do them again. And just anecdotally, I know you play baseball at a pretty high level, so I'll share the story with you. So my son's playing baseball. He's 7. He's just learning how to pitch. The other day, he gets a chance to pitch and loads the bases, walks the first 3 guys. Then ball comes back to the mound, gets hit back to the mound, they get the guy at home plate. Next pitch, he throws a wild pitch, the catcher picks the ball up, and they tag the guy out at home plate, 2 outs, and then he gets the next guy out. So after the game, my son and I could review it by spending so much time on why he was wild and loaded the bases and all the things he did wrong. And he did a lot of things wrong. I mean, as a baseball player, we could talk a lot about them. His arm slot was wrong. He was doing a lot of things wrong. And we could have spent 15, 20 minutes talking about all the things that he did wrong and all the mistakes he made and how unacceptable it is to come in the game and load the bases by walking everybody and not being able to throw strikes. Or we could focus on the fact that he figured out how to get out of the inning. And he found a way to find his arm slot, and he found a way to minimize the damage, and that's a huge positive. And then, tangentially, just note that, hey, you were a little bit low with your arm slot. You need to get your elbow up. We'll work on that in the next pitching side session. Who's going to be better in the long run? What is a more constructive way to think about your performance? The focus on all the things you did really poorly, or really recognizing what you do well with room to fix the things you don't. So I tried to give you a baseball analogy because I thought you might appreciate that, but think about that.
Yeah, I definitely do appreciate it. Thanks a lot. Yeah. Going forward, I'll definitely be focusing on that a whole lot more. So thanks for bringing that to my attention and giving me some constructive feedback. Definitely helps a lot.
Hey, go ahead and click our subscribe button so you don't miss any of the videos that we're producing for you in the trading community. And please take the time to add your feedback in the comment section for what videos you'd like for us to produce next and what you found helpful from this video. From all of us at SMB, train and trade well.